So imagine turning 65 years old and Uncle Sam handing you brand new $6,000 tax break, or $12,000 if you're married and filing jointly. Sounds pretty fabulous.
Well, it could be fabulous if you're okay with holding your nose and thinking DJT.
But is this as fabulous as it sounds, or is this just another political glitter bomb with a lot of sparkle, but not a whole lot of substance, just like that trick from the Abbey?
You're listening to Queer Money episode 607, and today we're discussing the new $6,000 boomer bonus.
Right. So this particular provision in the One Big Beautiful Bill has gotten a lot of attention because it's actually a significant help to baby boomers in retirement. And the idea here with this bill, as will hopefully the examples will show you, is to actually help middle income boomers, those who probably need the help the most right now. So before we dive into it, we want to let you know that this is a very mathy episode. Dave is going to have a lot of beautiful graphics.
Wow, there are a lot of numbers here.
Dave is going to have a lot of beautiful graphics to hopefully make it easy to digest and understand. But as always, if you have any questions or concerns, let us know in the comments. We'll be happy to follow up with all of them. While we're talking about the comments, let us know what you would do with an extra $6,000 tax break in retirement. Would you cover essentials, go on an amazing trip, help somebody in need, just splurge on those red bottom shoes that you've been dying for? What would you do with an extra $6,000? So David.
What's in it? All right, so what really is this? Well, starting in 2025, seniors who are 65 years or older can claim this new $6,000 tax deduction for singles, $12,000 for married couples filing jointly. This is just a 4-year provision. So they decided to start this in 2025 and end it in 2028. That is, unless Congress extends it. But it's very interesting. What is happening in 2028?
Why are they trying to get...
Well, we hope it happens in 2028.
Yeah, if we have it. Why are they trying to hand out carrots in 2028?
Right. So keep in mind here, it is available for both those who file using the standard deduction and those who itemize when they're doing their taxes. There is an important thing to keep in mind here. It does phase out. There are income limits here. If your income is above $75,000 as a single person or $150,000 as a married couple, you begin to lose some of your benefits. So let's take a look at some examples that actually show how this phase out works. So let's say you're a single filer making $85,000. The boomer bonus starts to phase out once your income passes that $75,000, and it disappears completely if your income is above $175,000. So that's a $100,000 range. At $85,000, you're $10,000 over the limit. So take that $10,000, divide it by the $100,000 range, and you get a 10% amount that's going to be phased out. So 10% of $6,000 means $600 deducted from your deduction. So instead of $6,000, your bonus would be $5,400. Now, if you're married filing jointly, let's say your income is $190,000. For married couples, the boomer bonus starts to phase out at $150,000 and it disappears completely at $250,000. That's also a $100,000 range. It's nice that they kept it simple like that. At $190,000, you're $40,000 over the limit. So $40,000 divided by $100,000 is a 40% amount that's going to be phased out. 40% of $12,000, because you're a couple, means you're losing $4,800 of that bonus. So instead of $12,000, your bonus is going to actually be $7,200. The key idea here is to figure out how far you are into the phased out range and turn that into a percentage and then apply that to the bonus and subtract.
So what isn't this all about? Well, so despite many of the political talking points, this is not the elimination of Social Security taxes. Seniors will still have to pay federal income taxes on some Social Security benefits. Analysts call this sort of a compromise, right? It's something that saves revenue, but it's not a completely full repeal of Social Security taxes.
It's amazing how it was a compromise when only Republicans voted for it and no Democrats voted for it.
Don't forget that it's Reagan and the Republicans who decided to start taxing your Social Security benefits in the 1980s. So, David, who actually benefits from this tax deduction.
Right. So again, it's seniors with taxable retirement income that will benefit the most. Lower income seniors, many of whom already either owe very little or no federal income tax, may see little or no benefit. So for example, if you're single and your taxable income is less than $23,000, you're not going to be affected by this at all. If you're married filing jointly and combined your taxable income is $45,200, no benefit here. So the deduction is expected to cost $90 billion over the 4 years. That's how much money is going to be given to seniors in these 4 years. So let's take a look at some examples, so some real life or pretend real life examples of individuals in our community who may benefit from this.
And how that would apply to them.
Yeah.
Before we dive into the examples, know that there has been a senior bonus on the books as part of the standard deduction for decades. This is a new tax deduction. This is not part of the original standard deduction that seniors have been able to benefit from. That's a deduction in 2025 of $2,000 if you're single and $1,600 if you're a married person filing jointly. So a total of $3,200, because there's two of you. $1,600 times 2 is $3,200. Look at me doing that.
Wow, great.
I know. It's like I'm a human calculator. All right. Our first example. So let's start with Maria, a 68-year-old single lesbian retiree with $58,000 in income for 2025. Here's how this all breaks down for her. First, her standard deduction is $15,750. Because she's over the age of 65, she gets the senior bonus that I just talked about, which adds another $2,000. And thanks to the new $6,000 boomer bonus, she gets an even bigger deduction. Add it all up, and Maria gets $23,750 in deduction. That brings her taxable income down to $34,250. Under the new rules, her tax bill drops by about $650 compared to the old system. That's real cash she keeps in her pocket, enough to keep her Subaru fueled or to finally spring for that Indigo Girls box set on vinyl that she's had her eye on. Lesbian priorities, baby.
That's right. All right, our second example here is James and Robert, a married couple. Their 2025 household income is $95,000. Now, James is 66, so he qualifies for the extras, while Robert is 63. So he's basically still a twink in Boomerland. So here we go with the numbers. Their standard deduction as a married couple is $31,500. James gets the senior bonus of $1,600 for being over 65. And James also gets the brand new $6,000 boomer bonus. Robert, you ain't getting nothing.
No, apparently now Robert's a gold digger.
Right. So together, that's $39,100 in deductions. Subtracting that from their $95,000 in income, their taxable income drops to $55,900. Their tax bill is about $700 lower than before this new law. So that's money for a nice weekend, or cash money for a nice weekend in Palm Springs. Or if they're feeling wild, one night of bottle service at the Abbey. Choices, ladies.
Yeah, you've got your choices. All right, example number 3. Now let's look at Denise and Carla, a married lesbian couple pulling in $180,000 a year in retirement. Both of them are over the age of 65, so they qualify for the goodies. But at this income, the IRS says, not so fast, ladies. Their standard deduction is $31,500. Because they're over the age of 65, they get the senior bonus of $3,200. That's $1,600 divided by 2, or $1,600 times 2. Normally, they get the new $12,000 boomer bonus, but since their income is in the phase-out range, they lose about 30% of it. That leaves them with $8,400 instead. Put all this together, they have $43,100 in deductions, lowering their taxable income to $136,900. Their tax bill is nearly $1,800 less than under the old rules. So that's a lot of savings. Basically, it's a new deck for their mountain cabin or 400 pairs of sensible lesbian sandals from REI. A solid investment either way.
Right. All right, coming in as our last example, meet Paul and Anthony, a married couple who bring in a whopping $285,000. Yes, they are those gays. Mm-hmm. Private Pilates, wintering in Palm Springs, and matching 1,000 thread count linen sets from Italy. So here's the tea on Paul and Anthony. Their standard deduction is $31,500, same as other married couples. Both are over 65, so they get the senior bonus that has been in existence for decades. Their combined bonus is $3,200. As John has mentioned his math several times now, 2 times 1,600. But since their income is over $250,000, their entire bonus is phased out to zero. Back off, bitches, is
You
what
get nothing.
Right, that's what Uncle Sam says. That leaves them with $34,700 in deductions, making their taxable income $250,300. Their tax bill, about the same as before, just over $50,000. The boomer bonus doesn't do anything for them at their income level. But guess what? They'll be fine. Worst case, they skip Mykonos this year and suffer with the rest of us in Fire Island like peasants.
So let's look at the bigger picture here. The Social Security Trust Fund could deplete a year sooner thanks to this bill. That would take it from an estimated 2033 to the year 2032 due to the lost revenue from this bill.
Oh, look, Gen Xers are getting screwed by boomers again.
Okay, boomer. So this is just a tax sweetener. It's not a fix for the larger retirement system challenges. It's not a solution to the challenges that we have with Social Security. And in fact, if you compare this to other proposals for Social Security, eliminating taxes on Social Security could lose about $1.5 trillion in revenue, which is probably why that's not something being talked about.
Yeah.
Except for in our household.
Right. This is probably something that's a little bit better. So that's about all the math that John can handle today. Let us know what you think about this new boomer perk. What would you do with that extra $6,000 tax break? Are you going to use it to cover essentials, travel, or splurge a little? Now, keep in mind, there are some great tax strategies that you can put in place to benefit the most from these new deductions. And guess what? We're going to talk about those in a couple of weeks. So make sure you come back.
Make sure you're subscribed and set notifications so you don't miss that.
Yep. And if you want to find out how on track you are for your ideal retirement, remember to download the free Happy Gay Retirement Calculator, which you can get with this QR code in the description of this video or in your podcast player.
Then come back next week when we talk about the top 5 places for gay retirees to retire in Greece. That has been a popular request. As always, if you love this episode, like, subscribe, set notifications, and share this episode with friends who also want to retire fabulously. And until next time, stay fabulous. If you have questions about your taxes in retirement, check out this video on 7 taxes to be aware of before you retire or die.